Hey, what's going on, guys? Max here with Because Bitcoin, and today we're going to be talking about the bullish scenario for equities and potentially Bitcoin as well. Really, it's the bullish case potentially for all things classified as risk on assets. So let's not waste any time and dive right into the charts. What we're looking at right here is the weekly time frame of the NASDAQ. Or technically this is the NASDAQ futures, but nonetheless, it's the NASDAQ going back to basically 2000. And below it here, we've got the basically US interest rates or effective federal funds rate. As I'm sure a lot of you tuning in are aware of, we are on the brink potentially of a Fed pause, and they should be done hiking interest rates. However, right now they are technically classifying it as a skip because I think they want to give themselves the opportunity to hike again, maybe another 25 basis points sometime this year, and not have to backtrack on their words and spook the markets further by saying, "Yep, we're pausing," and then they actually end up hiking later, and everybody becomes basically on tilt. So they're basically going to most likely frame this hike next week. They're going to be framing it as a skip, not officially a pause, but nonetheless, I think that they probably should be done. So maybe we get another 25, maybe we don't. But nonetheless, let's get into the technicals on, like I said, why this could potentially be the bullish scenario for equities and how I could actually see us going to all-time highs. So just taking a quick look at where we're at right now. NQ's at a very weird spot. This, of course, the bears are saying this is a complacency shoulder right here. And we're actually not going to go to a new all-time high. And this basically is the start of the doom shoulder where we don't really go to an all-time high and we'd actually come back and fill in some of these lows. I don't know. I don't know about that. It seems pretty aggressive. It also seems very early. But let's talk specifically about, what this potential pause rally could mean. So first things first, let's go back and let's look at some previous pauses. So we're actually going to go down to the daily time frame so we can take a more granular look at what happens when the Fed actually pauses here. So this is back right before the dot-com crash or correction. You can see that right here, basically August 16th, 2000, the Fed paused hiking interest rates. So this entire time right here, they were increasing interest rates, went from 5 all the way up to, I think, like 6.5 ish. And basically right here, when this interest rate, the US interest rates are marked by the orange line, just a reminder. You can see right here, once they paused, the knee-jerk reaction to that pause, and I'm actually going to make it orange so it's in line with these interest rates down here. The knee-jerk reaction to the pause was in fact down. And again, this is the daily chart. So upon the pause, we had a big drop, 15.5% over a week, pretty nasty. But subsequently following that, we went on to rally pretty significantly from that low, about 30% over just over 3 months. So again, I'll actually put this back on there. So initially, we had a we'll just say 15% sell-off upon the pause, and then we went on to rally. I'll put the rally in green for over 3 months, pretty significantly, for 100 days. And then, of course, they start cutting, and basically the whole thing unwinds. And I mean, truthfully, this is my least favorite example of the ones we're going to talk about, but nonetheless a very important one. So point being here is upon the pause, the knee-jerk reaction was down. And subsequently following that, we had this Goldilocks period where the Fed was done tightening and things hadn't broken yet or begin to unwound yet. So there's a Goldilocks period where risk can continue to rally just for a little bit longer. Let's keep it moving. Let's take a look here at this pause. We're going to mark it in orange once again. So this here is the pause in basically early summer of 2006. So this entire time, zoom in a little bit, the Fed was tightening from summer of 04 This entire time, they were increasing interest rates from effectively 0 or sub 1% all the way to over 5. So let's take a look at what happened upon the pause. Once again, the knee-jerk reaction to the Fed pause, the official Fed pause, was down. We got to mark this in red. We'll keep it consistent. But then, similarly to the one before the dot-com crash, we actually saw the pause rally continue for over a year, well over a year. 30% rally after the knee-jerk reaction down over 465 days. Significant rally, 30%. Actually very similar to this one, about 30%. This one happened much quicker. The dot-com one did. But similar knee-jerk reaction upon the initial pause, potentially people getting out a little bit too in front of their skis, thinking that the recession is here, thinking that something is broken. But in reality, what happens here is if nothing has broken yet and the Fed is done hiking interest rates, it takes a while for interest rate hikes to actually work its way through the plumbing of the US economy. It can take over a year. So a lot of the pressure from these interest rate hikes all this time, again, from summer of 2004 all the way until summer of 2006, really hadn't even been felt until we were significantly higher than when we had paused. So again, very similar knee-jerk reaction down upon the pause. People probably market short, interpret it as very bearish, but in reality, nothing has really broken yet. So we have this Goldilocks period. Let's keep it moving. Next example would be right here. We're going to mark this pause from basically end of year 2018. We're going to mark this in orange once again. And we can see this entire time leading up to this period, basically starting in fall of 2015, they were hiking interest rates again from effectively sub 1% all the way up here. I think this is about 3%, 2.5%, 3%. But either way, nice rate hikes. Again, let's see what the initial reaction is upon the Fed pause. Similarly to the previous two examples, the knee-jerk reaction to this pause was again down, significantly down. Upon the official Fed pause, the knee-jerk reaction was down 10% in a week. But in similar fashion, many, many times, we see something similar after the pause here. I'll zoom in a little bit. We're getting a little bit small here. We don't need to see that much. Similarly, after that knee-jerk reaction down, before any really meaningful recession or crash, and again, this in fact was COVID, so you could argue it was just flash crash, but there were a lot of other warning signals at this time. Not for this video, but this was, whether it was because of COVID or other things, there were definitely some risk-off signals going into this. But as you can see here, upon this pause in December of 2018, we had a knee-jerk reaction down, people getting out in front of their skis, thinking that it's over. And then we again rallied this time for 60% almost from this low upon the knee-jerk reaction down to up here to the high before an actual crash or recession. 422 days, very similar amount of time actually to this previous one right before the great financial crisis. So again, 465 days, 30%. And this one right before COVID was 422 days and 60%. So where are we at right now? And why do I think we could potentially rally all the way into even late Q2 of next year? Well, again, they haven't officially paused yet. The Fed is not done tightening technically. All right. There's a very high probability that we get a skip at this next FOMC meeting, in September. But I think they're being very careful. They're framing it just as such. They're framing it as a skip, not a pause, because they don't want to get out in front of their own skis and do anything prematurely, which could spook the market. So anyways, let's just say that they skip the next meeting and they potentially pause on the following one, not the next one, but the next one from there. we're actually going to jump over to Fed Watcher tool and take a look at the probabilities. Just give me one moment. And this is a free tool here. You could just Google Fed Watcher tool and this will pop up. Everybody can see this. So you can go over here to probabilities and you can see basically interest rate probabilities as the market is currently pricing them in. So as of right now, going into the September meeting, again, this is less than 1 week away from the time of making it. This is the next meeting right here, 9/20/2023. There's a 98% probability, in fact, of them basically pausing. We should effectively be done. We should be done with our interest rate hikes. And actually here, let me go here first. Yep. So here's for the next meeting. There's just another way to look at it. 98% probability that they're going to pause and a 2% probability that we're going to get a small hike. All right. So just again, another way to look at it right here. So moving along here, the market's really not expecting a high probability of actual cuts until, look at this date right here, June 12th, 2024, through the end of the year. That's when it becomes far more likely that they're going to stop the pause and actually start cutting. And now these are still, less than 50% likelihoods because it's so far away, so much can happen. But as of right now, the market is not really pricing in. It's not pricing in a high likelihood of them easing off basically until June. So moving down here again, total probabilities, you can look at June 12th, 2024. There's a 56.98% probability that they will begin easing. So again, potentially the pause will start end of September. I guess if you want to count this next meeting, if they skip, if you want to count this as the start of the pause, you could. But I think it's probably safer to call this a skip and the official pause will come at the following meeting. So this is what I'm thinking could potentially happen. And I'm going to give my bullish scenario for what could maybe happen from now until summer of 2024. So right now we have the next meeting, the next interest rate decision, the next FOMC next week, September 19th through 20th. And then the following meeting is October 31st and November 1st. So basically, 5-6 weeks until this meeting. I think the October-November meeting is likely going to be your official pause date. And of course, we know that just looking at the charts again, upon the pause, the knee-jerk reaction is down. The market gets a little bit excited. They think that, oh, well, they pause, that must mean that something is broken. And actually, in fact, a lot of the interest rate hikes have not even worked their way through our economy yet and aren't even being felt and probably won't be felt until the following year. So again, we're going to go back to the charts and I'm going to paint a picture for what I think could happen here for equities. So we're going to pull up NQ again here. So again, just a quick reminder, upon the pause, similarly here for the NASDAQ, knee-jerk reactions down, and then the market goes, oh wait, nothing's actually broken, and then they bid for a pretty significant period of time. There's a bit of a Goldilocks period, a window. So again, hike, pause, knee-jerk reaction down, market bids, very significant amount of time. Things go back to being very good until those interest rate hikes actually work their way through the plumbing or the pipes of our economy. So again, hikes, knee-jerk reaction is down, market rallies, Fed cuts, we get drop, rinse, repeat. So let's assume that even though they are likely going to, I guess, technically pause, but it's really more of a skip, I think it's going to be end of October that we get the official pause. You could argue with me and say it's here, but I think we're probably best served considering, just being conservative, saying that the true pause, the pause that will probably last until Q2 or summertime-ish of next year will happen in October. What could happen here? Again, I think we're probably going to get some sort of knee-jerk reaction down. I've actually got some drawings saved that I made earlier right here. So this is what I think we could be doing right now. And You guys can let me know in the comments what you think. I'm going to go back to the higher time frame just for a moment. I think we're basically just in this giant range right here. You can see this is range high, mid-range, very clean reactions there, numerous good interactions there, and range low. So basically just all-time high, local low of last year's bear market where we're at right now. And on the lower time frames, you can see that we're essentially just in a bit of a falling wedge here, which is actually a pretty bullish pattern. I typically don't trade these, but this one's potentially shaping up to be pretty clean. On top of that, there is a weekly imbalance right here, and it's actually being protected by a nice set of equal lows, which for those that watch our shows pretty consistently, it just implies there's a lot of liquidity down there. And it's a pretty high probability play that if it goes down there, it'll get bid back up. So this orange line is when I think you're going to officially get the pause. And they're probably going to pause for over a year. So they'll call this next one a skip and then they'll pause. But what could this potentially mean? So I think it could potentially mean a new all-time high for the NASDAQ. If we want to be, bullish on things, it would certainly make sense that in similar fashion, leading up to the pause, we would get a pretty significant drop down. We'll make this red, just like the previous ones. They're all red, and then we rally. So again, very similar. We're going to try to keep it consistent here. So potentially pretty nasty drop leading into the pause. And then if we're not expecting rate cuts until June-ish of next year, and I say ish because no one really knows for sure, could we potentially see another 30% rally, all the way through maybe June of next year? Could we see something like this happen? It's happened before. We just went through a handful of examples. We see the knee-jerk reaction down into the pause, and then the market goes, oh crap, we need to short everything. This is the recession. And then they go, oh wait, we are way too early. Nothing's broken yet. The labor market's still strong in this instance. Why would we short? Why would we not bid yet? We still have money. People still have jobs. Things haven't rolled over yet. We haven't even felt a decent portion of the interest rate hikes that we've undergone. So maybe something like this happens. And there's a lot of confluence at this level here on NQ. Again, I'll move this so we can see them and talk about it. We've got our mid-range, our high time frame mid-range from high to low. So this should provide a significant bounce, in my opinion. This is a very significant high that we were able to finally flip, and we never really came back after breaking out to retest it. So maybe we retest this August 2022 high. We have a weekly inefficiency. Again, right here, see this green candle? It's highlighted green because it's got statistical outlier data in terms of volume. It was a very strong breakout. Never came back to fill it in, resting liquidity under these equal lows, and it's also the bottom of our falling wedge. So this area for me, let's see if I can find it here. I always forget where it is. This area for me, that's not what I wanted. I wanted this one. This area, why does it keep doing that? I keep clicking on the circle. Well, anyways, that area for me is a very, very high probability bounce area. We've got the pause in orange. We've got equal lows. We've got a weekly imbalance. We've got our 0.5 fib of this multi-year long range. So maybe this is the dip into the pause rally. And in similar fashion, maybe we rally for, another year. Maybe it even goes longer. Some were 400 days. Who really knows? I think it'll probably be a little bit shorter. I think pretty soon following a Fed pivot, which is expected sometime middle of next year, give or take. I think we're probably going to get some downside pretty quickly because this was such an aggressive tightening cycle. When these interest rates finally work their way in, they will be felt. We're most likely going to have, initial claims spiking. Unemployment will probably trend north of 5%. And, then I think we probably revisit some lower levels. But in the meantime, it's something to consider. It's something to consider for sure. So that's really it, guys. I'm considering bidding this level. And I'll say this, if I am going to play if I am going to play the NASDAQ here, and this actually is going to be a pause rally. So sometime I'll mark it here. This is TQQQ. So this is 3 times leveraged, which is, again, very risky. 3 times leveraged NASDAQ long ETF. So if I think this is going to happen and we are going to get the pause rally, and I mark this here as official pause, question mark, put that in orange, put that in the middle. If we do come down to this point of confluence down here, and we are expecting a new high on QQQ or NQ futures, that would maybe be like a 30% rally from this point on NQ. You could expect something like TQQQ to rally upwards of 100%. So this is maybe an area, this is maybe a play that I'd be looking for, but you're really going to want to be patient, and you're going to want to see this wedge hold. So you're going to want to, play it a little safe here, make sure this is actually going to hold. You can maybe add some in that weekly FEG, and then, maybe start looking for a breakout. And if it does play and the NASDAQ goes to an all-time high, and we do get the Goldilocks period and the NASDAQ rallies, well, TQQQ is going to be poised to probably rocket up 100% at least, maybe more, but it's a very high risk play. You better hope it bounces there. These leverage ETFs are no joke. What would I expect for Bitcoin? I don't really want to get too much into it. I'm a little bit more uncertain on what Bitcoin's path forward might be during a Fed pause. But I do think it would probably lead to higher prices. So real quick, we'll just do Bitcoin just because we're here. So why not? I'm a little less certain on what the future could maybe hold for Bitcoin here, but take it with a grain of salt. And, I do think that the correlation, let's get rid of these. We'll just manually delete these. The correlation between, Bitcoin and NASDAQ, I think it's pronounced. I think it's something to consider. And I don't think that if the NASDAQ goes to an all-time high, Bitcoin won't do anything. So what could I potentially see for Bitcoin? Well, if we get the pause right around here, I would expect in similar fashion the continued dip into a Fed pause. So, maybe it's already started. Maybe we dip down here even, and we get that highly anticipated 35 to 40% drop that we have historically seen in pre-halving years. So let's see, Fed pause, question mark, official Fed pause. So we could come down, retest this level. There's also a CME futures gap down here that's completely unmitigated. So lots of confluence. And again, in pre-halving years, not uncommon to see a drawdown of this size. So maybe we see a dip into the pause, and a really hot level that I've been just waiting for is basically this monthly gap right here. This monthly inefficiency, I think, does come back to get tagged. So if the NASDAQ is going to rally, and I guess the S&P 500 TradFi indexes will rally to new highs upon the Fed pause, the official pause, maybe Bitcoin could do something like this. We go a little bit lower, and then we start rocketing up, into the end of the year. We get the Christmas rally, and then, maybe we just kind of hang out within, this level somewhere around here going into the halving, which is April. So the next Bitcoin halving is going to be right around here. Bitcoin halving 2024. So maybe we do something like this, and that would be ideal, truthfully, because miners are going to be under so much pressure if Bitcoin's not above 30K going into the next halving. So I really hope for their sake something like this does happen. And it certainly would make a lot of sense. If the NASDAQ is going to rally to a new high in this scenario, it makes sense to maybe come back and fill in some of these, higher time frame inefficiencies from the bear market. And hopefully price can remain around or ideally above 30K going into the Bitcoin halving as miner revenue gets slashed in half. So Yeah, looking for more downside in the short term, but don't be fooled by the Fed pause when we officially get the Fed pause. When we get the official pause, the knee-jerk reaction might be down and people will be doom posting. But until we see the labor market really start to roll over and see initial claims spiking and we see unemployment moving north of 4% to start and probably even north of 5%, there's really not that much of a reason to be overly high time frame bearish. I understand structurally, but just keep in mind we went through a handful of examples today, where the NASDAQ and risk has performed extremely well right after a tightening cycle and then through a pause until we actually got that pivot and something broke. So that's all I got for you guys today. Thank you so much for tuning in. My name is Max. I'm the CEO of Because Bitcoin. I hope you guys found some value out of this video. Try to get it up as soon as possible. If you want a little bit more of an intimate approach to how I trade and the rest of the Because Bitcoin team, we have some premium links in the description of the video below. We have a really awesome Discord too. It's basically just a hive mind of alpha. So we share all of our positions and analysis even more than we share here publicly on YouTube, on our shows, on recorded videos, and then X Spaces. So yeah, please consider supporting us and I guess supporting your trading journey by checking out some of those premium links below. I guarantee it will be worth your time. If it's not, you just let me know. But anyways, guys, thanks so much for tuning in. Hope you found some value. Have a great weekend and take care.